All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for September 14th, 2023. We start with the 30-minute portfolio and advanced hybrid swing. And we'll start with Alcoa. And yesterday we initiated the COTA 2 after the PSAR flip. And we used the standard risk box to the bottom of the PSAR. We got a nice move to here. Today it opened higher and continued to go. So we added a second position and it closed very well. So we're holding that one on an initial risk here of about 1, 2, 3, 4, 5R on the first trade, 1R on the second trade. So we're about 6R in hand on 2 positions, and everything's looking good to go. We got a couple new guys on tonight. So we're on the 30-minute charts with the standard indicator layout. I started, oh yeah, let me also just say, yeah, so today's price action is in the yellow box. That's the high and the low of the day. The bluer box is the 5-day look back. The dark blue is 10-day look back. Standard markups look like green dots are buys, red dots are sells. The reddish square is the standard risk that we take. That's based on statistics and chart patterns. And then an open trade is basically this from start to finish looks like that black box. So we initiated the pattern is the COTA 2 PSAR flip. We have a wide stop here in the usual way, and it closed right here. So that's how we read that. The Amazon trade, we had 2 entries 3 days ago. Yesterday we added a third position on the emerging dragon pattern. Today, as it started to sell off and went through the PSAR, we took the exit on all those positions. We had about 4R on the first position, 3R on the second one, 1R on the third one. So a total of about 8R. I didn't take the re-entry, but Amazon still looks strong for tomorrow. Caterpillar, we closed the short yesterday on 2 positions, fortunately, because today gapped up. We took the gap up in the PSAR flip, went long with the standard risk, and this thing is holding 3R, and it's going to be very close to testing key resistance right here at the top of the RL10. So if it can get through 284, that's where I will look to add a second position here. But this was a really strong one-day move, holding a little over 2R. So I like that trade a lot. This one also illustrates the point that when you get a sharp adverse price in a great American company, that you are well served to take advantage of the adverse move, but to be ready for the sharp reversal and the buying quality on a dip. That's what that looks like to me. Cliff Natural Resources. We tried this was yesterday's close. It gapped up above the peak of the RL10, so that becomes an emerging dragon entry. We had a standard risk box in red on it. This thing ran all the way up in the first hour, a little over 1.5R. Came all the way back. I held as long as I could because I wanted to love this thing, but I ended up taking a tiny fraction of a gain. That was wasteful of that opportunity. CVS covered the short for a half an hour. Dish Network was amazing. Yesterday, you will recall, I didn't like that entry at all. It was a 1, 2, 3 entry, a little morning hook. So rising lows, took out the second bar's high, so put a standard risk on it, and it closed pretty well, holding about 2R. And today it gapped up here. I added a second position, and then the thing just took off. I probably should have had a third position in either one of those two locations, but I wanted to hold it overnight. So I was content with two positions. And then on the initial risk, 3, 4, 5. This first position is holding 6R, and the second position is holding 3. So we've got a total of 9R on two positions, and it is free and clear. Watch Dish Network tomorrow. Let's see what it looks like on a longer term. If we go out to the daily chart, this thing is still in early days of a recovery. That was really, it went, you see how it went into the winter, got the PSAR flip. This was the first real vote up. I'll tell you what, Dish Network needs to be on your short list because this thing has an opportunity to get to the top of the dragon around 8. The previous belly of the dragon when it first collapsed. And this thing has no resistance between 680 and 780. That's a 15% gain opportunity until it starts hitting the resistance. And then if it breaks above 820, this thing is free and clear. So I am really liking that as a longer term swing. Back to the salt mines here, Dish Network. I'm sorry, was that Dish? Yeah, so that was that's the 30-minute bar, the intraday move on Dish. Missed the chance to get more out of that. Devon Energy, no trade, although it looks good for tomorrow with that PSAR flip. I didn't want to own that overnight. Let's see, Electronic Arts. I took the Kata 2. Why is this a Kata 2, you ask? Well, because we got a series of higher lows. There's a PSAR flip right here. So that's a standard Kata 2. It's still below the peak of the RL10. That makes it a Kata 2. If we had entered north of that peak, then this would have been in the emerging dragon. This had a nice run up and an orderly sell-off right where you would expect it to have a sell-off. And because I don't want to stick around for that, I'm happy to take 1.5R in the usual way and call it a day. Because I know how to re-enter. I would re-enter if this gets above the new 10-day high. All right, next up, emerging markets. This is an emerging dragon. Why? Because we had higher lows, but now it took out the peak of the previous RL10, so it's above the statistical resistance on the gap. So I took it, but there really was not a lot of follow through, so we got about 0.5R on that one. If it resumes, like north of 39.40 tomorrow, I'll be looking to add that position back on with a re-entry. Ethereum, Kata 2, closed very well, has an opportunity to do more tomorrow. Mexico, tried the Kata 2, half an hour, low follow through. Brazil, this was a continuation of the nice 3-day trade. It made an emerging dragon because it's above the peak. Standard risk, closed well, holding about half an hour. Intel, no trade. International paper, tried the gap and go. It failed back. I love this one too much, and I gave back far too much R. That was like better than 2R, and I just barely escaped with my teeth. So that was poor trade management on that one. So IYR, yesterday we had the collapsing dragon, and we loved it because it came all the way down to here. And we held it because we wanted more, because it was in the winter. But all it did today was gap all the way up to here. So it took a plus 2.5 R trade and turned it into a half an hour loss. The revenge trade worked out pretty well. When the risk box was reversed, I entered second position, and it closed pretty well. So we're holding 3R on that one. I probably should have just exited to erase the, loss, but I think there's more available in here, and it's testing that key resistance level here. So I actually think that has a chance to go. So we get the two positions, 1, 2, and if it breaks above 85 and a quarter, I could be tempted to add a third. Regional banks, gap up and go, holding about an R. Mattel tried the collapsing dragon short. It was initially nice, but then I scratched, couldn't hang, and was not emotionally prepared to re-enter to the downside. McDonald's re-entered after cashing the 3R win yesterday. It dipped, then recovered, so it's above the peak. That's an emerging dragon, closed very well, holding 2R. Merck tried a short, basically scratched. PSAR flipped for the long side, holding an R. Microsoft had a two-position entry, started yesterday, added a second one today, took the dragon exit, really satisfied with that one for 4R. Marijuana took a half an R. NVIDIA tried the long side, stuck around too long, got hit with a half an hour loss. Clean Energy covered the short. I missed the long side reversal. Rivian took the PSAR flip, and it's holding an R. Tesla initiated the re-entry on the COTA 2. I like that long term, especially if it can get above this crucial resistance level, the statistical level of resistance right here. It's getting ready to test that, and up it goes. If it can get through there, watch for Tesla. U.S. Steel, I closed the nice short yesterday. Today it gapped up to here. I was in the money for a long while, escaped with my teeth. That's 3 times today I stuck around far too long. So I had a problem with believing in the long side today and gave back too much in open profits. However, this one sold off and recovered. I liked the COTA 2 action, so I re-engaged here. It's holding about 0.3. I like this for the long side. If it can get through 31.10, then it's free and clear. All right, so that's the hybrid swing portfolio. We're going to shift now to the sniper trade of the day. So this is the intraday trade technique, and we're looking at 3-minute charts. And this is where this symbol closed yesterday. It gapped up all the way to here. It made a opening range 3-minute high right there. The low of the 3-minute bar was here. After it closed up around in here, it continued to sell off. So we're short on a breakdown of the opening range 3 candle with a standard risk box based on that's the R10, which is 1/10 of a range stat. That's the statistical computation for the maximum, say it with me, reasonable intraday move. So based on statistics, we say the range stat is the most that we're entitled to have a belief that we could see. That's the limit of rational exuberance. And then 1/10 of that, range stat divided by 10, gives us a box of this size. So we know that if this thing continues to go, how far south could it go? We go from the top of the day, and then we hang a range stat. That means there's about 8 more of those chunks to the downside before it becomes an irrationally large move. That's an essential concept for understanding how we day trade for the new guys. So we are short one on a breakdown of the OR3. What we're looking for, why is that a good trade frame? Because we're looking for it to fail back to yesterday's close. So if this is our risk, then a close of that gap is about a 3R target. And if it continues to fail through that, that's where we would probably add a second position, because it would have closed the gap and then continued to fail. Check or hold? Are we clear on that? Okay. Instead, what that thing does is reverse sharply against us. It went this far down and then reversed up. So I took about a 0.3 loss. Check or hold? And then on the reversal of the wrist box, which had an element of like a kata 2 to it, it had this down and then up. When it takes out the official risk of the short side, I play the long side. Again, using the standard risk, the same size standard risk box. Check or hold? Now, if we're wondering how far to the upside, how high could this go? We come over here and find the low of the day, which is here. And then we add to it a plus range stat, which is 10 times this box. And again, that's based on statistics. The average range of the last 30 days plus a standard deviation. So there's a lot of room to the upside on this one. So that's the entry on the long side with a standard risk. Check or hold? This, by the way, is what bar by bar trading workshop looks like. That's on sale right now. If you're interested, send me a note. That trade is working in our favor. You can see the PSAR is working. I take a standard exit on a single position. If you just use the PSAR, and then take the exit at the skin of the dragon. So if this is leg 1 and that's leg 2, here's where the R10 peaks, and now you can see the RL30 rolling over. That makes this a really good exit right here. And if that's our risk, that's 1, 2, 3. That's a plus 3R. So when you count the minus 0.3 and then the plus 3, we are at net 2.7 right now. We're still above the VWAP, so I'm just tracking it. And then there is a kata 2. Why is that a kata 2? It's a kata 2 because you just had, you you just had a successful move, cashed a winner, the PSAR flipped, and it flipped again, and the lower level of the RL10 was higher than it was over here. So you have this rising lows, and the fact that we got the reversal in the RL10 and the PSAR flip, that makes that an automatic entry. That's the COTA 2 entry. And then we would use the same standard risk box for our execution risk. But where I would trigger would be if the PSAR broke, I would already be getting out here instead of letting it fail this far. So I'm really only risking about that much. Now, the upside move is I look back to the peak of the RL10, excuse me, and I say that's the statistically significant upper price. That's the same place where the PSAR flips to. And if it has to get through that price level for this to be very interesting. So that means from between where I entered and where it kind of gets locked in, this is called the tactical space. And my only job in the tactical space is to get my initial stop north of my entry. And I want to get that north of my entry so that I can lock in this little gain right here. And we call that gain chat, what do we call that gain? We call that gain no lose plus dinner for two, meaning that we made $100 by being able to take our risk out and move our risk up to here. I could already do that. And then this has become a science project to see how much could we get. We're not going to lose any money because the worst case is that we're going to make $100. We took our risk out, and the worst condition is we're going to make $100. That does wonders for your psychology. So that's what our job in the tactical space is inside this space is to get our stop to no lose plus dinner for two. And we could already do that a couple bars in. Now it cleared that, but is starting to roll over. You would not be wrong in taking that as the exit right now. Why? Because you're an R in, and it is failing right where it failed before. Are you going to really let a 1R win come all the way back to here? Are you going to let it do that when you have an R in hand? So that means locking that in right there is a perfectly supportable idea. Check or hold? If you don't take that but stay in it, you might have considered aggressively entering or re-entering here, adding a second position or re-entering if you got out here, because it's above the PSAR previous. If you're just a PSAR guy, you say, what's the big deal? I'll just take this and collect 2R. And then over here we were at 3.5R, if I remember, or 2.5R. So that gives us about 4.5R potential for the day. This last one was basically a nothing, a scratch. So 4 hour potential for the day, and this was on McDonald's on the 3 minute charts. All right, let's look at the traders real quick. Here's Tim. He's trading Alcoa. Tries a quick OR3 for minus 1R. Loses 0.7 on the, tries the short and cuts it. He could have stopped in reverse here. He waits for this and gets paid a little bit and gets paid a little bit, but nets about minus 1.2 on the grind. And he stays out of the chop. He grinds around a little bit, misses the move that should be in here is the long right here, which pays for the whole day because you can add a second position here. As it was, he waited for it to break above, and then that was just in time to hit the loss. I think you've got to see that as a harsh move down. And the fact that it failed to fail further, that PSAR flip is pretty good. I mean, you had 15 bars of downward pressure, and now that's the indicated entry. Devon Energy gets a fractional win. I don't mind that as a time stop, but I think you got to re-enter here at a new low of the day. And not taking those two signals today made all the difference. I think you got to keep firing. I think we saw that. I'm sorry, we already saw that. Okay, here's Jose. Staying with the his old reliables. This is Altria. He's trading the 5 minute. There's the downward pressure. There's the PSAR flip. There's the bottoming out. There's his entry. He makes his 1R stop the bottom of the PSAR flip. He takes the orderly exit when it rejects the 1R. So he's able to make about 0.7. That's perfectly played. He gets 0.5 on the grind and forward after the PSAR flip hits. PSAR flip hits. Just nothing there, so he grinds out 0.5. Pinterest loses 0.5. That's a good exit. That's a good entry, a better exit. Then on Walgreens, which we had set up yesterday, he finds the PSAR flip and crushes it for 3.5R. This time he doesn't get out prematurely. As long as it's in the summer and rising and the PSAR is favorable, he's good to go. He takes it the second red candle that hits the dragon. Perfectly played. This is George. So this wrist box is not bad. Yeah, this is a reasonable 1R. So if you're short from here, then I might draw that to the edge of the PSAR dot for my 1R box. So this is still a scratch. It rolled over and failed again. So when this starts reversing against you, I mean, what I want you to notice is that the PSAR is the limit. You know, that's your exit signal on a short. Like if this short doesn't work and breaks out here, that's your exit. And that's also the signal for an SSC to go long. So I think we stuck around too long here. This should have exited here and should have been long about here, and you'd have been in good shape. Stuck around too long, especially on the first one when we were in R in hand. After that one, you want to kind of see that cut there for a no lose plus dinner for two and get paid a little bit. When you're an R in hand and you end up scratching, that is very psychologically draining. Walmart, again, this is the stop. This is a stop and reverse. So this is supposed to work right away. When these things start failing, they're supposed to collapse. When they don't, and you get out, then you can stop and reverse. But this is much too close for a 1R loss. When you're short from here, this PSAR flip is your 1R. Now, I don't disagree with exiting here, but that should only be about a 0.3 loss. And then you should be long from here. Now, it didn't follow through, so you would have scratched. But the PSAR flip has a lot of information value to it, so you want to watch for that. And the same thing, this is late in the day for a 30-minute intraday trade. I mean, if we're ever going to take that, this initial rollover here, this is the 1, 2, 3 entry short. So we can be short in here rather than waiting for it to collapse here. Now that's a collapsing dragon for sure, but you don't have much time left in the day. This is supposed to fail right away. When it doesn't, you need to be getting out inside that bar right there at the skin of the dragon. And then your 1R loss should be the top of the PSAR. So this should only be about a 0.3 loss. That will preserve your capital and your sanity and your emotional resilience. All right, that's everything we got for today. We'll get this published and posted. I want you to listen to the, I'm going to make available the Foundations Q&A discussion today. That was about a 45-minute narrative of the tortoise ecosystem for strategies and systems and courses and where we're going to be heading with the OWL group and all the different instructors with their different courses. So it gives you a nice roadmap for our educational offerings. So that's everything I got for you today. You guys take good care, and we shall see you tomorrow.